playing around with the market quality dashboard in the global venues area, I decided to have a look at the cost of trading across markets of the world. Focusing on Australia, because that's where we are based, I decided to compare first the cost of trading in Australia with the cost of trading in other Asia-Pacific markets. For the purpose of the comparison, I used a metric called relative effective spreads, which measures the cost of demanding liquidity by estimating the movement from the midpoint of the spread just prior to a trade to the point where it is fully executed and dividing that by the midpoint to make the estimate relative for each stock. I chose Hong Kong, Singapore, Tokyo and the National Stock Exchange of India as comparators for the Australian market. I also chose a 6-month period from 1 January to 30 June 2013. First off, notice how much cheaper it is to trade in the National Stock Exchange of India. Taking 28 June as a reference point, around 5 basis points compared to 19 in Tokyo, 20 in Australia, 25 in Hong Kong and 39 in Singapore. Swapping to the first decile of securities for each market, NSE goes down to 4, Australia 14, Tokyo 17, Hong Kong 18 and Singapore 32. Curious as to what stocks one would need to trade in Australia to achieve the cost of India, I created a group of the top 20 stocks with the result that such stocks trade at 6 basis points. Switching now to the lowest decile of securities shows why what are euphemistically described as dogs may be a man's best friend, but they're certainly not a market's best friend, particularly not for the Australian marketplace, where the cost of trading in the lowest decile of securities is a staggering 5,480 basis points on average. This compares to 2,700 in Singapore, 1,400 in India, 707 in Hong Kong, but a very respectable 144 basis points in Tokyo. Now, removing all but the best Asia-Pacific markets and adding the 2 best venues in the US reveals an even more amazing result for Tokyo. It beats NASDAQ, which comes in at 281 basis points for the lowest decile of their securities, and is just pipped by New York at 65 basis points. Perhaps another way to benchmark the efficiency of markets is to measure the cost of trading in the lowest rather than the highest decile of securities in those markets. Under this scenario, the Tokyo market is worth a closer look.